Welcome to the Deep Dive. We're here to cut through the noise and get you the insights you really need. Today, we're digging into Advanced Micro Devices, AMD's latest quarterly report. That's the Form 10Q for the quarter ending June 28, 2025. Now, a 10Q can sound pretty dense, right? But I find it's often where you uncover the real story about a company, their health, their plans, the landscape. Our mission today: pull out those key nuggets on AMD's performance, their strategy, and, the challenges they're up against.
Exactly. And it's fascinating because a 10Q, well, maybe not beach reading, is just packed with information. For anyone maybe not familiar, it's a quarterly report companies have to file with the SEC, a mandatory checkup, really. And it's way more than just numbers. You get a really comprehensive look at financial health, strategy, risks, stuff you just don't get from headlines. It gives you the context, the why behind the news.
Okay, let's unpack these first numbers then. The top line growth, well, it looks pretty impressive. AMD's net revenue for Q2 2025, $7.685 billion. That's up quite a bit from $5.835 billion the year before. And for the first half, $15.123 billion compared to $11.308 billion. So strong growth there. Net income also saw a really big jump, $872 million in Q2, way up from $265 million. And earnings per share, $7.54 from $0.16. So the headlines look good, right? But is there more to it?
Absolutely. And yeah, this is where digging deeper pays off.
Yeah.
Because despite that really strong revenue and net income you mentioned, their gross margin, basically the profit after the direct cost of make the chip, it actually dropped.
Dropped how much?
Down to 40% in Q2 2025 from 49% the year before.
Oh, okay. Why?
Well, the direct cost was this huge charge, around $800 million for inventory and other costs. And crucially, it wasn't just some general write-down. It was specifically linked to U.S. government export controls on their high-end AMD Instinct MI308 data center GPUs. Basically, chips they couldn't sell where they planned to. And that charge, it also pushed them into an operating loss for the quarter, $134 million compared to income last year. So big swing.
Yeah, that $800 million hit, it really shows how geopolitics can slam right into a company's financials, doesn't it? But it's not just defense. AMD's also playing offense, making big strategic moves, like that ZT Systems Group International acquisition that completed back on March 31st. Cost $4.4 billion cash, shares, some contingent stuff too. And the idea is it helps them deliver, end-to-end AI solutions, speed up design and deployment of AMD-powered AI infrastructure.
Right. But here's a really interesting layer to that ZT deal. AMD isn't actually keeping the whole thing. They're holding the ZT manufacturing business for sale.
Oh, really? The manufacturing part?
Yeah, which is actually the bulk of ZT Systems operations. The filing shows assets held for sale $4.326 billion, liabilities $1.968 billion, and they even booked $104 million in income from discontinued operations from that segment already this year. So it looks like they're cherry-picking the AI design and deployment smarts, the IP.
Without taking on the lower margin manufacturing business itself.
Exactly. Keeps them focused, more agile. It's quite a strategic slice and dice.
Smart move. Okay, what else financially? They've got a new share buyback program, right? The board approved another $6 billion in May, brings the total authorization up to $14 billion. And they already bought back $1.2 billion in shares in the first half of this year, returning cash to shareholders. Plus, they issued new debt. $1.5 billion in senior notes back in March, maturing 2026 and 2028.
And, speaking of the bottom line, that net income number we talked about, the $872 million.
Yeah.
A huge chunk of that, $853 million actually, came from a one-off discrete tax benefit.
Ah, so not from operations.
Not directly, no. It was the IRS approving something called reasonable cause relief for dual consolidated losses.
Right.
Basically a tax break on certain international subsidiary losses. It essentially doubled their reported profit for the quarter, which just highlights, again, you got to look past the headlines. The 10Q also gives a quick mention to the new One Big Beautiful Bill Act that passed July 4th and says AMD is still figuring out the potential impact.
Okay, so we've got the big picture, the major moves. But AMD isn't just one thing, right? To really get it, we need to look under the hood at the different business segments. Where are they, really making money, and where are the headwinds hitting hardest?
Good question. Let's start with data center. Revenue there was strong, up 14% in Q2 to $3.24 billion and up 34% for the first half, mostly driven by their EPYC server CPUs.
Okay, strong growth.
But remember that $800 million charge?
Yeah, the export controls.
That hit this segment directly. So despite the higher revenue, data center actually posted an operating loss of $155 million in Q2. That's a huge swing from a $743 million income last year. Partly the charge, partly higher R&D spending too.
Right, that charge really echoes through the report. Okay, shifting gears. Client and gaming. How did that look? This seemed like their real bright spot. Revenue up, what, 69%? To $3.621 billion in Q2. Huge number. And the client part, think Ryzen processors for laptops and desktops revenue there were up 67%. They sold more units, about 17% more, and got a higher average selling price, up 42%. Gaming was strong too. Yeah, up 73% in Q2. Mostly semi-custom chips, think consoles, and their gaming graphics cards. This segment seems like it's firing all cylinders.
It really does. And you see that reflected straight in the operating income. Client and gaming operating income just soared. $767 million in Q2 compared to just $166 million the year before.
Yeah.
So that higher revenue dropped nicely to the bottom line for that segment.
Okay, and the last one, embedded. This was the only one down right. Revenue decreased 4% in Q2, and for the first half, a bit of a mixed picture overall then.
Yeah, the embedded segment declined. They attributed it to sort of mixed demand in end markets and also customers just normalizing their inventory levels, after maybe building them up before.
Right, supply chain smoothing out maybe.
Could be. And it's worth noting, overall R&D spending was up 20% in Q2. That reflects continued investment, especially in AI, and also higher costs from recent acquisitions, like bringing on new people. Oh, and one more point, international sales. Now 71% of their total revenue in Q2, up from 60% last year, shows their global reach is expanding.
Okay, so growth, strategic moves, but also some definite pressure points. Let's talk challenges and risks. It's crucial to understand these, and the 10Q always lays them out pretty clearly. Competition, obviously. This industry is brutal. Intel, NVIDIA, the ARM ecosystem is growing, and even some of their own customers are designing their own chips now, too.
Yeah, intense competition. And then there's the government factor we already touched on. How significant is that? Well, the 10Q really details the impact of those U.S. export controls to China and other specific countries. It directly hit that MI308 product, led to the $800 million charge. That's a concrete impact.
Huge impact.
And there's uncertainty about new rules, too, like this AI diffusion rule mentioned. The concern is these rules can put AMD at a disadvantage against, say, domestic Chinese competitors who don't have the same restrictions.
Right. And it's not just governments. Their whole business model relies heavily on partners, doesn't it? Third-party manufacturers like TSMC, Global Foundries, AMD designs, others build. And the report flags the risks there, supply issues, fighting for capacity, quality control, potential delays. It's kind of fascinating, right? A cutting-edge AI company still facing these fundamental manufacturing and supply chain risks.
Absolutely. It's a constant balancing act. And linking this to the wider world, you've got economic uncertainty. Things like inflation, higher interest rates, maybe a recession that can hit consumer confidence, customer spending.
Even just customers paying their bills on time.
Exactly. And it can raise costs for materials, too, squeezing margins from another direction. They also mention climate change now as an emerging risk.
Really? How so?
Well, think natural disasters, like earthquakes in Taiwan, where a lot of manufacturing happens. That could disrupt everything. Plus, more climate regulations could mean higher compliance costs down the line. It's a complex web.
And of course, the ever-present cybersecurity threat, always a big one in tech. The report mentions attacks getting more sophisticated, maybe even using AI themselves, and the risk of data breaches. Losing intellectual property, sensitive info, that's critical for them.
And these aren't just abstract risks, right? They carry real potential costs. Regulatory fines, think GDPR in Europe or CCPAC-PRI in California, potential lawsuits, damage to reputation. It's a major focus area.
Okay, let's shift focus slightly to the people inside AMD. How do they keep talent motivated? The report mentions stock-based compensation is a big part of their all other operating losses, shows how much they rely on equity to incentivize employees, which is pretty standard in tech.
Yeah, they use the usual tools: stock options, restricted stock units or RSUs, and performance-based RSUs. The agreements spell out vesting schedules when employees actually get the shares. But they also make it clear the employee is responsible for the taxes, which can be significant.
Right.
And generally, these awards aren't transferable before they vest. You can't just sell them off early.
Now, here's something I found really interesting, these clawback provisions. For senior VPs and above, AMD can actually terminate or even take back equity awards. And even the money from shares already sold if the employee does something against the company's interest.
Wow, like what?
Things like poaching other employees or going to work for a competitor within a year of leaving, or other misconduct.
Strong measures.
It really shows how seriously they take protecting their talent pool and secrets.
Yeah, that's a powerful retention tool, or maybe deterrent. And thinking about employees, especially international ones, There are detailed data privacy clauses, particularly for folks in the EU, EEA, or UK, explaining how personal data is used for the equity plans transferred internationally, and importantly, outlining employee rights, like accessing their data, objecting, requesting deletion.
That's crucial these days.
Definitely. And there are also change of control clauses. These can speed up vesting if someone loses their job after an acquisition, for example. Gives employees some security during uncertain times.
Okay, so we've covered a lot of ground here. What's the big takeaway? We've seen AMD riding a strong growth wave, especially in client and gaming, making smart AI-focused moves like the ZT Systems deal, even if they're selling off parts of it. But at the same time, facing real headwinds, those export controls hitting the data center hard. Navigating that tricky global supply chain, fierce competition.
Yeah, it's a complex picture. And as we wrap up this deep dive, maybe here's something to mull over. You've got this global semiconductor industry facing more and more geopolitical friction, right? And incredibly rapid tech shifts, especially in AI. How do companies like AMD balance that relentless push for innovation and market leadership with these growing complexities of international trade rules, supply chain risks, government interventions? What does that balancing act mean for the future of tech, maybe even for technological interdependence globally, and ultimately for the devices we all rely on?